Bitcoin is breaking the all-time high and it's confirmed. This is a follow-up to my last video where I talked about what to look for. And we have gotten that. We have definitely gotten a daily bar that closed above the last all-time high of about 42,000. Now, if you want to be more patient, you can wait for the weekly bar to close, but the week looks pretty strong and some people may not want to miss the move. What prompted this video is that I've got questions in my social media asking me, well, what happens if we don't get a nice clean pullback to confirm the level? Well, I think a lot of people were hoping that this red bar yesterday on February the 10th would come back to a nice clean confirmation where they could put a nice low risk entry and play it up. But you may not get it. And so you got to ask yourself as a trader, what are we going to do? Well, you could take the breakout on the first sign of confirmation, which will be now, but that's going to be a higher risk. On the flip side, you won't miss the move. Those that wait for a pullback are going to get a lower risk move, but there's a chance that they will miss it. On the last breakout a few months ago, you missed it if you waited for a pullback. So let's take a look at that, and then let's look at how a trade should have been structured at that point, because we still need to account for risk. And it's very easy to do. Let's look at this example. Let's go back and mark the last all-time high and talk about how that played out and how to trade it. We use our handy dandy time machine. So we had this setup where in November we came up and tested that level, confirmed it, so we knew that was the level to beat. And so sometime in December, when we had price break the level, that is a very solid break. Daily bar closed, we can say the breakout is live. Now, we need to ask ourselves, no matter what anybody tells you, no matter what you think that Bitcoin is going to go to, you need to ask yourself, at what point does this breakout fail? Now, you can use technical indicators for this, or you can use simple price action. The simplest price action is going to be looking at the lows, the swing lows, and say, okay, well, if price gets below these levels, then the breakout has failed. And that gives us a nice wide berth to give price in case it wants to mess around and not go. But we still have to take this into account in our position sizing. So let's say that we want to be ultra conservative and we want to take this lower swing low here. So at this point, that would be our risk. Let's call it the $16,000 level. So what we don't want to see, of course, is for a big red bar to show up and break through our stop. But it could happen. In trading, anything can happen, and you have to be aware of this. This will be a failed breakout, and you don't need to be in it anymore, no matter what you think or how painful it is to take the loss. But we're giving it a very wide berth here, so it should be okay. We still, though, need to calculate our risk to this point. So if we say that we're going to give it this much area of play for our trade to play out, then we would be looking to buy in somewhere, let's call it $21,000. And then our stop would be at about 16,000. So here's how we would fit this into an account, risk-wise. So let's say that we have a $1,000 account, and we only want to risk 10%. In other words, we only want to take a drawdown of 10% on this account. Now, a lot of people would think in crypto that that's a little too conservative, but I actually think it's too aggressive. 10% would be $100. We're only going to stand to lose $100 on this. And remember, if we're doing it from 21,000 down to 16, it's about $5,000 of risk. So $100 divided by the movement of Bitcoin, 5,000 that we're going to give it, that tells us our position size. Our position size needs to be 0.02 Bitcoin. And at that current price, 21,000, that means we only take on really $420 worth of Bitcoin. Now, of course, we're not even using one-to-one leverage there. And you may think, oh, well, that's not very much to buy. What am I going to do with that? Well, here's how this works. What ends up happening is if Bitcoin were to come down to this level, that's a 25% move. And so if you take the 25% out of 420, that is our $100 move. So by not fully leveraging up, by not even going 1-to-1, a 25% drawdown means that we only take about a 10% drawdown. And that keeps us safe. But we'll still be able to make good progressive gains. Are we going to retire on this one trade? No. But this is what real traders do. Real traders that stay around for a long time. Let's look at the current situation. So let's say that we take the breakout now. We need to use the same principles we did before. There's nice, clear support here. So our stop would have to be down here around, let's call it 28 to keep it nice and even. 28,000. It just so happens that we're buying it at 48,000. So we have a solid $20,000 range that we are playing with, that we have to actually give it. Now, you could be a little more conservative. You could say, okay, well, if this pulls back to the last all-time high and then messes around in this area, well, then that's going to be my risk. You could do that as well. But however you want to do it, whatever you put as your risk, you need to size this according to your account, or if you want to do it as a function of leverage. But you must consider this. You cannot just go jumping in because you're afraid of missing the run to 100,000. That is just a guess. I don't care how guaranteed you think it is that every corporation in the world and every Federal Reserve is going to adopt Bitcoin. It doesn't matter. What matters is what you can control, which is your risk, position size, and your entries and exits. So these are some ideas to help you structure this trade safely. I hope that you take my advice, and I hope that you make a lot of money on it. But keep your capital protected, because even if you miss this opportunity, there will be others. So don't be rushing just to grab this one. Trade wisely.